to our next guest, because we're talking about money, as Lucy says, mainly how we will use money. The days of carrying cash, maybe even credit cards, are numbered. Technology is reshaping banking. So what does the future of money look like? With me, Arvind Gupta, head and co-founder of Digital India Foundation. Arvind, good to have you with us. Talk to me first of all about what Digital India Foundation is, please.
He talked about something very simple but very important that I'm just extending that. India saw, if you could please close the door there. We had a monumental event in India in the last week of January where one of the oldest temples got re-inaugurated, called the Ram Janambhoomi Mandir in Ayodhya. Mm-hmm. And why I'm saying this is very, very interesting. We had more than 500,000 people line up to visit the temple. And I happened to be there, and the only way we could bust the queues and manage the crowd was use technology. Mm. And we have this UPI technology, which is a payments technology, which is related to money, and that's the reason I bring it into the conversation. It's something that everybody in India uses.
Yeah.
In fact, the joke in India is if you're paying by cash, you don't live in India. Mm. The poorest of the poor who were lined up there to enter, we used this UPI-based system to enter to just do a QR scan, and that automatically created a queue for people, and they could just donate a single rupee, by the way, and that created a system where they could enter the temple and seamlessly.
Jaidev.
So how?
Sorry, Jaidev, please come and join us. Late entrant, but Jaidev, good to have you with us. Janardana, Chief Executive of Zopa, brilliantly timed. No, that's fine.
So I'm just, what I'm trying to bring into the conversation here is that there is a very big dichotomy when you talk about money. It's a very boring topic, of course, after space and
but
soccer
it's an important
and cricket.
Topic.
I think that's what keeps us all together.
Yeah.
But money is what binds the whole world, let me tell you that. But it's very interesting because, I see a lot of us talking about the future of money where 2 billion people are still struggling to open a bank account.
Yeah.
A quarter of the world's population is bankless. India, of course, decreased that number by 500 million people by giving them banking access in less than 5 years. So we opened 500 million new bank accounts, which is the highest banking revolution in the history of mankind ever to happen. So it's a very different world from where we sit in India to talk about money, to solve real societal problems, to see 400 million people pay using a mobile phone, as everybody has talked about, every day, and make payment as little as a penny or a cent, using a mobile phone without, and the other person accepting it without any friction or any additional cost. So,
and in so many economies that has happened relatively quickly. And I know you've done a lot of work on digital inclusion, but it's about making that leap. It's gone from cash straight away to digital payments, bypassing that need for a bit of plastic entirely.
So yeah, and that is exactly what we do. We, I work in the intersection of three things: technology, building new platforms, what are called digital public infrastructure, very uncommon in the part of this part of the world, but very common in India now. Digital public infrastructure is rent-free infrastructure, like UPI, like identity, like e-commerce, available to all entrepreneurs, founders, and funders, at a zero rent cost. Two, we work on policy issues, and there's a lot of regulation in finance, and we can talk about that. And three, of course, money, venture capital for the industry. So India is not an oil-rich country, but we still have walk the talk by funding our own industry, by funding our own moon tech, space tech startups, through great investors. Some of them are sitting in this room, and we make sure that the money is really pumped in to the national initiatives of digital and space tech or agri-tech or whatever you may want to.
And he's making that money work. Jaidev, good to have you with us. Welcome, Chief Executive of Zopa. Talk to me from your point of view, what you are preparing for. What does the future of money look like from where you're sitting?
Interesting. I think the conversation, building on the conversation here, I think the UPI is definitely kind of showing the way of what is possible when you move entirely digital. Because you cut out so much of the transaction cost that, I worked in the credit card industry for a long time, and the rents that are associated with the card payment are incredibly inefficient for the economy in general, and makes it very hard to make smaller payments kind of work. I think contactless has made a small dent in that, but it's still, I think, too expensive for merchants in terms of how much they have to pay for a transaction. So in the UK, open banking has taken one step towards that, but I do feel that actually making real-time bank-to-bank payments quicker, possibly on the basis of a central bank digital coin or a central bank digital currency, would be the right kind of next step. And I would think most of the West here would probably be there in the next 4 to 5 years, I would say.
And what is driving that? Is that consumers saying, we want this access, we want to be able to take these things with us wherever we are, we want to be able to bank more quickly, more efficiently, more cheaply? Because it strikes me that a lot of the traditional players in the industry, this is not in their interest to do this.
Yeah, I think it's definitively one driver is the merchant, right? The merchant is probably, if you're a small business, you're probably tired of paying the amount of expense that you spend, right? In terms of, people like us, the issuers of cards, the networks, visas, and so on. So from a merchant standpoint, there's a reasonable push towards cheaper payments. I think, particularly as you could think about smaller payments and the desire to be more efficient, there is a push from a policy standpoint, from a governmental standpoint, around having more of that not in cash, so that the economy is more efficient, more real time, but also there is the ability then to be actually getting more of the cash economy into the taxable economy, right? Yeah. So from a government standpoint, a policy standpoint, there is a push. So push from merchants, push from the governments, and lastly, as you can think about, as the UK is a great example where we moved to instant payments a lot, but that has come with a lot of fraud, right? Yeah. But again, if you went to a more of a central bank digital currency kind of standpoint, then it probably becomes a far easier to control fraud and actually almost take back that digital coin in a way that is more seamless. So I would think that as fraud continues to proliferate, there will be a bigger push towards more truly digital currency. I think those are the three things that I can see that are kind of moving towards it. And yes, the likes of Visa and MasterCard are going to kind of resist it, but increasingly they have kind of accepted it, and they are actually starting to innovate themselves into the bank-to-bank rails and so on and so forth.
Yeah, and Arvind, I'm interested in, you, as I said, you do a lot of work on digital inclusion, but, the pace of change in this field is, it's speeding up all the time. How do you make sure you're bringing people with you who are just at the moment getting their head around having a bank account, never mind talking about digital payments and the like? How do you make sure that, whole swathes of the population are not left behind in this transition?
Well, as I said, the number one objective was to give them access to the bank account.
Yep.
And I think very wise people across the world have said we need more banking and less banks. India has done both, giving them more banking as well as more banks. We converted the postal service into a banking operator in India. Now, a post office walks into your house every day, a post person, and now that is also a bank. With a small mobile ATM, you suddenly converted 200,000 agents into banking touch points. So, there has to be innovation, which is both on the policy side, as Jaidev said, but also making sure it's accessible and, it's trustworthy.
Yep.
And that has kept people, trusting the Indian ecosystem and coming. And to that point, 500 million new bank accounts, as I talked about, have actually deposited about $40 billion worth of their savings into the banking system. So they clearly tells you there is a trust going on.
Yes.
But I may add two more things, which he said absolutely correctly. Policy push, there's a merchant push, but the merchants are also asking for not only just cost efficiency, but also transactional efficiency. Studies across the world have shown that if you take a digital payment and a cashless payment, you can process 6 times more transactions per minute. So think of the efficiency a small vendor, a food cart vendor can do in processing a lot more transactions And this is and the third point, which is actually a lot of economists fail to understand, they can price it correctly. Anecdotally, there is, if you used to buy something for 99 pence, for example, or 1.99, or 1.90 for that matter, the 10 cents or the 10 pennies was a candy given back to you. Diabetes, of course, but apart from that, it was priced wrongly. Now with digital, the merchants are coming back and saying, I can price it at 2.05 or 1.95 without worrying about inflation.
Yeah.
So this is really great insights coming from the merchant ecosystem, which is saying that we need this small payments, micro payments to be enabled and freed from the clutches, if you mind, from the two big duopolies which have existed, are $1 trillion duopoly, by the way. They, of course, will resist this.
Yeah. Do you want to jump in?
I was just going to say, from the inclusion standpoint, it's pretty interesting that, when you think about inclusion, there are three buckets that we need to think about. One is the marginalized because they're poor. Given the proliferation of technology, and particularly mobile phones, I think that has actually digital has become a way of including them rather than excluding them.
You put the tools in there.
It's the only way to actually get them. Then you've got, inclusivity from an accessibility standpoint, people who are differentially abled or have some physical handicaps and so on. Again, I feel technology actually is a enabler there, particularly if providers take into account accessibility requirements and standards. And there's a third population which has been where the problem has been, and particularly in countries like the UK and Europe, where their societies are aging a bit more, is the older people, right? Where they are just not used to having that. But as we, that is a problem that we need to, I think, face into and figure out how we can make that easier. But again, I would think that as time progresses, that population becomes smaller because most of us will get older, but we would have had the privilege of having used this when we were younger.
Yeah,
so,
and therefore the trust that comes with that. And we've talked a little bit about trust. I want to talk briefly about regulation. We've got a few minutes left. And there's always that argument, isn't it, that regulation of any sort fails to keep up with the change in technology. Where are we on that scale of, things like open banking, amazing. But is fintech regulation keeping up with the speed of the technology and what that allows us to do?
I think UK, there is always more you can do with regulation and be faster, but I feel they have a good framework for it in the sense that I think currently the regulators are talking about it from an outcome-based standpoint. So rather than regulate the technology, because technology moves too fast, why don't we regulate customer outcomes? And if banks, financial services providers are responsible for providing good outcomes, and it's up to them to figure out how they do it, protect consumers' data and give them good outcomes, and that's what regulators should focus on, because then as technology moves faster, you could still hold the banks accountable for those two things, and it's up to us then to figure that out quicker. And I think outcome-based regulation is the only way actually you can regulate this, rather than, I think, European regulation, which is more trying to get to how you're doing it, is probably incredibly misguided.
Yeah. Couple of minutes left. A prediction from each of you, if you will. Arvind, let me start with you. What will it look like 20 years from now? How will we buy stuff?
20 years, too long. But yeah, a couple of years from now, biometric. Faces, your biometrics are the most best form of your passwords, if I can use that word, not what you know or what you have.
But that involves a significant investment in technology.
Well, countries who are smart enough have done that. You and India including, sorry, I had to say that. That's the way to go, and and that's where a lot of platforms like Google and Apple have a lot of proprietary, and we talked about data that they own or the kind of they have. So it will play out. Google, is my prediction, will be the biggest bank in the world, and not anybody else, or Apple for that matter. The second thing is that I think there will be a lot of bottom-up innovation.
Yeah.
And that is different from the top-down innovation we have seen in the last 50 years. Bottom-up innovation, which impacts the next 6 billion of the world. And it may not just come from the US or UK or all the existing finance capitals of the world. It will come from societies like India, Africa, and Brazil, and the BRICS countries.
Jaidev?
I think wearables instead of biometrics, because we might have 7 different ways we want to pay, and then it's very hard then to have my eyes kind of nudge this way to say that's the way I want to pay. But biometrics might be the way we authenticate, but wearables might be the way we choose to do that. And I still feel banks will be banks because already these tech companies are too big, so I can't see central banks allowing them to be big banks because it just gets too much into the country's sovereignty. So I think banks will be banks because they are too small rather than they have been too big in the past. Yeah.
Thank you both. I feel that everybody needs some fresh air and some food. So it looks like lunch is ready. We'll meet back in here after lunch. But ladies and gents, my panel, thank you.
Thank you.
Thank you.